JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 2nd of November 2022. So yeah, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can always check out for more information about us. Now, let's jump into the charts. The first one I want to pick up here is Nikkei 225. So yep, we didn't really get that stronger move above this downside line. However, as you can see, the index managed to remain just bang on this downside line. So what I was talking about previously, I was saying that in order to go higher, we need that confirmation break. Well, we didn't really get that, and we got a little false breakout here, but we didn't really get a good one, and we didn't really see the daily candle staying above it. So in other words, at the moment, as you can see, it doesn't mean that we're very bearish or anything. No, I think the market is just waiting for today's Fed announcement. So yeah, keep your eyes on that one if you're in trading indices, especially the US ones. Well guys, watch out for today. So we have in the evening, on the European evening, we have the Fed announcement. So yeah, currently the expectation is for a 75 basis point rise. The word on the streets is kind of that this could be the last 75 basis point hike before, let's say, maybe slowing down a little and maybe then just jumping into those 50 or 25 basis point rise. So yeah, at the moment, let's test this information. Let's see how it's going to play out. Probably the easier option is to wait until the news starts coming out, and then of course wait for the Fed Chair Powell press conference, which could also move the market a little. Now, and again, coming back to Nikkei, yes, I mean, as you can see, it didn't really, it closed in negative territory, but it didn't really, let's say, close significantly in their negative territory, and yep, we kind of remain basically here. So in other words, I am just waiting until I get a clear breakout here through one of my levels. Shanghai Composite. Good push to the upside, and look at this, we got to hold up near this downside line, near that 21-day EMA, so everything's looking quite interesting, I would say. But again, the same story, we're waiting for a clear breakout through this downside line in order to go higher. And yep, if we do push through this area, through this downside line, through that 21-day EMA, then yes, more buyers could join in. So at the moment, I am waiting. I'm playing the waiting game, yep, and I want to see what's going to happen tomorrow, or sorry, tomorrow. Yeah, well, actually tomorrow on this one already, because we still have a bit of time left, around 50-something minutes left of trading, but again, I want to see how all this is gonna play out here. Now, ASX 200, guys. So mission accomplished. Team, we're not really heading home, but we're just observing this one right now. But look, the target has been reached. I mean, initially my target was the 200-day EMA, or if we clear it, then the 6,994 zone. Well, we just fell shy by just a point or something from reaching it, a couple of points from reaching it. To be honest, I'll take that. It's okay, it's fine. I mean, this is still a fantastic result, and now I'm gonna be watching that psychological 7,000 mark. So again, At this point, maybe something like this could be possible. Even if we do fall below the 200-day EMA, I'm still kind of keeping an eye on this little hurdle here, which is going to be near the 100-day EMA, and that little hurdle is near the 6,848 level, and then we will take it from there, guys. At the moment, I am just, like I said, I'm just observing this. I want to see what's going to happen here near this hurdle. If we get a hold up, great, we could see a rebound, but that's in the scenario if we do fall back below the 200-day EMA. If we push through this 7,000 mark, great. I'm gonna go further north, and actually I'm gonna aim for the area around here. Let me just minimize this arrow here. So for this area, 7,117 level, approximately around here, that's going to be my next target if we do clear that 7,000 mark. If we do fall below the 200-day EMA, as I said before, it's not the end of the game here for the bulls, but we could see maybe a little recorrection towards the 100-day EMA. For me to start looking at like much lower levels, a drop below this 6,752 territory would be ideal. Now the German index, DAX. Okay, guys, so let's have a look. If you remember, I kept on talking about this this idea of a rising wedge pattern. Of course, these patterns tend to break to the downside. However, until we remain within the boundaries of that pattern, it could still drift higher. So this is what I talked about previously yesterday. Well, yesterday, I said that, look, ideally my target is right now this 200-day EMA, which I would like it to test. I hope it's going to test it, and then maybe we could get that little correction back down. So let's not rush into anything. First, let's keep an eye on it, and like I said, if we do start breaking the lower side of this rising wedge pattern, then yes, I'll go lower, but at this point I need to be very careful because we have this downside line here, which could be, you know, a good support area in a way, together with that 100-day EMA. So, you know, be careful with this one. Let's say with the downside, yes, on one hand, it's a very bearish indication right now. However, again, whenever we have, let's say, clear obstacles on the way lower, you need to kind of consider them, guys, because sometimes maybe, yes, one part of the rising wedge idea that is going to break, you know, to the downside could be working out, yes, but then it, for example, it fails here somewhere, and, you know, a lot of traders see the same thing, and basically it fails somewhere around to go lower here, and then rebounds, and, you know, more buyers jump in. So this is where, you know, you start. It can kind of you start accepting the fact that the rising wedge actually didn't work out. So, long story short, at the moment, as long as the index remains within the boundaries of the rising wedge pattern, I will continue aiming higher. Now, NASDAQ 100. So this one declined yesterday. This one took the biggest hit from the top three, and yeah, NASDAQ declined. We tested the 21-day EMA and actually fell below it. I talked about this idea, saying that, hey, maybe this is a you know, this is like an inverted head and shoulders pattern. Could be the case, guys. Yes, still could be the case, because we're still around here. The cash index right now is sitting at around 11,320 zone. So basically, we're still above this hurdle, above this area right here, and we're actually above yesterday's close. We're kind of near that 21-day EMA right now. So yeah, of course, I'm gonna keep an eye on the Fed today, obviously, and then we will just kind of, at this point, like I say, I would say, like I said, in order to go higher, I need a clear break through this. Through this potential neckline. But if we want to go lower, a drop below this 11,177 territory would be great. Dow Jones Industrial Average, so also declined yesterday. A bit of a correction here. Didn't really go all the way to that 200-day EMA. Kind of stayed somewhere around here. Look, I mean, maybe, just maybe, if we just take this into account here, maybe this could be a bullish flag of some sort, a bullish pennant in a way, maybe, because well, actually, this is the problem here when you have something like that. So maybe this is like actually, let me actually jump into a 4-hour chart. I think maybe that'll be easier. So look, maybe this could be like seen as a broadening triangle pattern, something like this. So let me just put this on the chart. There we go. So maybe it's something like that, guys. Again, not clear still. Still could go either way. And but one thing for the positive, for those bulls, I mean, we're still above this upside line taken from the low of the 13th of October. So in a way, there is still potential for this one to move higher. Again, let's see how the Fed's going to play out today, and if the market sees it as a bullish, or takes the Fed comments as kind of, so let's say, as bullish, as hawkish, then yeah, we could see a nice push to the upside here, a continuation move higher. So for the downside, let's put it this way, I would like to see a drop below this upside line and below that 200-day EMA, and then we will go from there. DXY, the dollar index, also waiting for the Fed. To be honest, I'm not gonna really predict here anything much. Just I'm gonna say that, look, we continue to trade below that 21-day EMA, so maybe it's gonna remain like that. But if it does push higher above that 21-day EMA, it could, yes, I will consider a move to the upside. But I'm not gonna forget that we are still within this kind of somewhat of a pattern, somewhat of a falling wedge pattern. Of course, according to all the TA rules, these tend to break to the upside. However, you know, maybe a bit more upside here, a test of this downside line, and then a drift back down before, let's say, you know, before kind of breaking out here to the upside could be possible. Let's again, at the moment, like I said, if you just purely take what we see right now and let's say ignore the fact that we have the Fed today, oh, by the way, together with the ADP non-farm payroll, ADP employment numbers. So yeah, those are coming out before the Fed. Of course, that's something that we're gonna be keeping a close eye on as well. But yeah, I think that the kind of the traders will be kind of waiting for the Fed in order to kind of do something here with DXY, maybe with the dollar index. So that's why I would say if you are trying to take a better position here, I think it's going to be a difficult one. Probably it's going to be easier for the scalpers. But yeah, for somebody who's like swing trading here, and if you're thinking of taking a position, I mean, yeah, it's going to be a bit of a difficult one. So yeah, like I said, at the moment it's unclear, so we're just watching this one. Gold, similar story. As I said before, well, as I said yesterday, as long as we're going to stay here in this kind of pattern here, and potentially we have ourselves a descending triangle, something like that, we're still below some of these downside lines here. So yeah, if you're looking for some upside, then well, wait for a break through both of these downside lines. Actually, I'm just gonna probably stick to that idea. For the downside, I think I will put this arrow right here. And yeah, I'll put this arrow right here. So a break through the 16.15 level could do the trick for a few more sellers. WTI oil. So this one is trying to make its way higher. Okay, so that's okay. That's fine. But it's still below that psychological 90 territory. As I said before, I need that confirmation break through the psychological 90 territory in order to go a little bit higher here, at least initially towards the 100 and the 200-day EMAs, and then towards that 93.62 level. For the downside, I would like to see a drop somewhere below this upside line, and yes, of course, ideally the drop below the 82.54 territory could open the door for more sellers, but I will start looking already at the downside if we do drop below this upside line. Ethereum is trading nicely, still above this downside line. Okay, so this downside line is a little bit on the tentative side, I would say. Excuse me. and that's taken from the high of the 1st of December 2021. So yeah, look, I mean, as long as we remain above this downside line, there is still potential for this one to move higher, but my initial target, as I said before, is this 200-day EMA together with that 1789 level. AUD NZD, guys, mission accomplished. Boom, there we go. I talked about this and I said that if we fall below the 200-day EMA and that 1.10 territory, then yes, I will go towards that 1.0922, which could provide a bit of support. So far, so good. Look, if it continues to slide, if it falls below this, then my next target obviously is this one right here. So near the 1.0825 level. So if you're, but again, I do understand that this could be a bit of a long shot. So if we do drop below this, excuse me, below this 1.0922, then initially probably I'll aim for this inside swing high of the 26th of April near the 1.0883, and then I'll go slowly because we had already quite a decent decline, and that's why I don't want to rush into anything here. I just want to go slowly on this, and initially, like I said, if we do fall below the 1.0922, my next target will be this 1.0883, and then we'll go from there. In terms of the oh, just bear with me one moment, guys. Okay, there we go, back to normal. Hopefully, I just had to get a bit of a sip of water, but anyway. So yeah, in terms of, like I said, in terms of this 1.0922 level holding, then maybe a bit of a retracement here back to the upside could be possible. So at the moment, all eyes are on this hurdle. AUD JPY, so haven't looked at this one for quite a while, and let me just kind of remove all the drawings here. I think it's time to do that, and yep. Okay, I have something stuck in my throat, I think, so yeah, apologies for that. Anyway, so looking at this picture here, AUD JPY, look, it still remains above all of the EMAs here on our daily chart. So this could be seen as a positive still. For me to get a little bit more excited, let's say with the downside, probably I would wait for a drop below this 100-day EMA shown as the green line, and then I will aim for that 200-day EMA. So this is the way I'm gonna play it, simple, without any levels here, and just purely with the EMAs. Now, in terms of the upside, I would like to see a push above this 95.74 territory just to be a little bit more safe. Yeah, just to be a little bit more safe. Of course, if you're a little bit more risky, I mean, we have this other little target here, this 95.55. A nice good push above it may also attract more buyers into the game, and then yes, we could go slowly. So that's why I would say, look, we could start looking at the upside from this 95.55, but then be careful near the 95.74 level, and if that gets cleared, yes, we could go further north towards the 96.55 territory right there, or even maybe towards this hurdle, this 98.69, and then we will take it from there. NZD CHF. So we had some unemployment numbers from from New Zealand early in the morning, during the Asian morning. So unemployment number remained the same as at 3.3. The expectation was for a little drop at to 3.2, but yeah, came as previous 3.3. So still not a bad number, but hey, I mean, didn't really meet the forecast. Anyway, still the New Zealand dollar is feeling quite comfortable after reversing here back in the beginning of October. It's still rising. We're breaking right now this downside line taken from the high of the 10th of June. Now, again, that doesn't mean that this is, it could go all the way higher here. No, we do have a strong obstacle, which is the 100-day EMA. As you can see by yesterday's activity, trading activity, we got a hold up here near this 100-day EMA, and we then kind of stalled and drifted back down. So still there is a possibility for this one to move higher, don't get me wrong, but I think that we will aim for either this 0.59 territory or this downside line taken from the high of the 6th of April of this year, of course, and then we will take it from there. Now, in terms of the downside, well, of course, let me just put this on the chart very quickly. Of course, this could be the case here. Again, not saying this exactly this, but maybe we have ourselves a nice thin kind of rising channel here. So if you're looking for some lower levels, then a break below the lower side of it would be ideal. Here's the CAD very quickly. So this one, talking about another channel here. This one's the falling channel, and look, yesterday we fell below the 1.36 territory right here, and we moved closer to that 1.35, and then we reversed sharply to the upside. Today we're sitting above that 1.36 territory, but below the 21-day EMA. So in other words, still the possibility for this one to drift lower exists. But I'm going to continue monitoring that 1.36 territory. A nice drop below it may attract more sellers into the game here. For the upside, it needs to see a break of the upper side of the falling channel. USD JPY, this one's a little bit on the boring side, to be honest. Now is just oscillating around that 147.65 level. If you remember, I mentioned this, and I kept on saying, look guys, keep on monitoring it, because that's quite an important level here, this 147.65. That's the highest point of 1998, which is right here. So we're currently kind of just hugging around it and not really doing much. But let's put it this way: if we somehow, continue to slide here, maybe that's time for that correction to the downside. But again, let's not rush into anything. Let's just keep an eye on this. At the moment, I would say this way: if from the short-term perspective, a drop below the 21-day EMA might attract a few more sellers towards that 145 level, and then we will go from there. GBP NZD. So GBP NZD is looking quite interesting. So we have ourselves here a nice potential head and shoulders pattern. I talked about this yesterday, if you remember, and we are now closer to this neckline. I talked about this as well, and this 1.9555 territory. So let's see if we can break that, and if we can, then yes, this will open this could open the door towards lower levels. However, at the same time, I mentioned this to you yesterday that, look, maybe on one hand this could be seen as a possible head and shoulders pattern, but maybe actually it's a flag, maybe it's a bullish flag. So maybe it's a bullish pennant of some sort, let's say, if we want to put it this way. There we go. I mean, somebody would say, hey, maybe this is a descending triangle. Yeah, could be the case. Again, like I said, this is all subjective. This is all very all these figures are these patterns are kind of in a way just to try to help you a little bit to understand where it could go, but actually it could still go the opposite way. It's just the way you're going to position yourselves, guys, the way you're going to manage your risk. So that's why be careful. At the moment, like I said, I mean, this could be seen maybe as a pennant, as a bullish pennant, maybe it's a head and shoulders pattern, maybe it's a descending triangle. But if you want to look at it this way, that you have two patterns in favor of the downside and one in favor of the upside. Which one will it be? A 66% chance for the downside and a 33% chance for the upside. 1% and 1% left for just kind of flat. But hey, let's see how that's going to play out, guys. Again, at the moment, like I said, I'm kind of watching the level here, the 1.9555. If we break that, I'll go lower, but only up until the 200-day EMA. Just for that, until then. GBP CHF. So my favorite pattern, the rising and the falling wedges, my favorite patterns. Yeah, there we go. We are kind of trading around here. Yesterday we tried to push a little bit higher but failed. And in a way, I would say this is a very beautiful pattern. This is a very beautiful shape here. It would be great if it would break out to the downside. However, that's probably what I would like it to do. However, but what will it do exactly? That's unclear yet. But hey, this is quite an interesting rising wedge pattern. Let's see if this is gonna, work according to all the TA rules and break out to the downside. You can keep an eye on that 1.1410 zone just for that extra confirmation. And yeah, we'll go from there, guys. GBP CAD, something that I haven't looked at for quite a while, and similar story here. Let's see if this is gonna end up being something similar, something like a rising wedge as well. So yeah, there we go. Again, a breakout to the downside here is required in order to consider this as a nice bearish, rising wedge pattern here as a bearish indication. Again, like I said, a breakout is needed, but as long as it remains inside the pattern, it could still move higher. So that's why, yeah, just at the moment I am observing this one. Let's see how that's going to play out. In terms of EURUSD, so EURUSD is also trading nicely here to the downside, is near this key support zone. And look, I mean, it has moved here. Well, I haven't looked at this one for quite a while, and kind of you can see that it moved a little bit here. So yeah, if you're looking for some higher levels, then it's a bit of a problem here, I would say. So let me just readjust everything here. Now, it's a bit of a problem for now, because again, at the moment everything's looking a little bit more bearish. We're near this 1.54 territory, which is currently providing good support. If we fall below it, we'll go lower, but towards this upside line. So this is where it could rebound. This is where it could rebound and push back to the upside. However, on the other hand, again, I think it's the we're in the period of wedges or something like that, guys. I mean, look, I mean, we have potential another one here. So basically, look, all this could work out beautifully. Let's say in the ideal world, it would work out this way. So we would fall below the 1.54 territory, move lower, test the lower side of the wedge, maybe even like have a breakout here towards this upside line, and then test it, rebound from it, and then push beautifully to the upside. So again, but that's the ideal scenario. That's the kind of in the perfect world. We're not there. I don't know if we'll ever be there, but we're not there. But so yeah, that's why we have to kind of take everything with a pinch of salt and approach it carefully. In other words, wait. In other words, wait for that, clear breakout, and then we can do something about it. If you want to go lower, then probably, yes, just a simple approach of waiting for a break of this upside line together with that wedge here through the lower side could be ideal, and then we could aim for that 200-day EMA. That's for in terms of EURUSD. In terms of EURUSD, this one's still flat. Again, waiting for today's events. Waiting for today's events. So yeah, I mean, if you're not really comfortable right now with it, it's fine. It's understandable, because again, it's not really doing much. So as I said before, if it stays above this downside line, above that 21-day EMA, then yeah, I'll still consider the upside scenario. But if it starts falling and stays below that 21-day EMA and below this downside line taken from the high of the 10th of February, then yes, we could go a little bit lower towards this upside line taken from the low of the 28th of September. If that gets cleared, yes, I'll go further south. So, but again, don't be surprised, let's say, if we don't get much activity today before the ADP numbers and then the Fed. So guys, that's it for this session. I really hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, guys, everything. I appreciate that. So yeah, thank you very much. If you want to catch me tomorrow morning, as always, my Traders Espresso, that's 7 o'clock GMT time. For now, have a beautiful trading day. Stay safe, have your stop losses in place, and everything will be fine. Oh yeah, and don't overtrade and wait for the news to come out first, and then you can do something about it. So thank you very much, and bye-bye.